let's keep in mind that we also have banks too. Alex with me still. Thank you, sir. Banks led by JPMorgan, kind of flat. JP right now after hitting 256. I mean, it's a tough one because the numbers seemed really good. Stocks obviously have been just amazing though. So where does this fit into our conversation today? How important is this with financials as a sector up about 2%? What do you think?
Well, I think it helps, but today was one of those days with the macro data that it was probably going to be a green day unless, for whatever reason, you see the mega caps turn around or something. But what I was going to say, if it wasn't that, is that financials might have been a bright spot and they could have been sort of an implicit bid in the market. Now they're just helping the situation. These names were all up before the CPI print, and now they're up as well. Going down the line, some of the takeaways. Nice fixed income revenue trading revenue for JPMorgan, but equities were a little bit disappointing. Net interest income forecast was way above estimates. And this was, I think, somewhat expected when it came to JPMorgan, when it came to yield curve steepening that we've seen, record profit for the full year. But Jamie Dimon does tend to be a little bit more downbeat than his peers, and I don't even know if it's downbeat. Just I think he sometimes just tries to be a little bit more conservative in his estimates. He's been around the block a long time, doesn't want to get too hot, too cold. You see this from the energy companies a lot. They know that they are in a volatile space. If they overreact every time crude oil spikes, they can get themselves in trouble. I think Jamie Dimon kind of approaches his bank the same way that some of those companies do, which is there's going to be good times, there's going to be bad times. Things change and they're dynamic. If we operate in kind of a scenario that is likely to happen, then we're probably not going to get ourselves into trouble, even if we leave some pennies out there. So they do see, Jamie Dimon sees inflation persisting for some time. So kind of along the lines of, I think, what Peter Schiff was saying, but maybe they come to different conclusions.
Right.
When you go to Goldman, nice equity trading. Their revenue and net income were also really, really nice when it came to beating estimates. And they see, from the leadership, they see improving operating backdrop. So a company that is joining the party here in Goldman. They're the class of these four movers, up 5%.
That's the one that stood out to me because when you've got investment banking surprising across the board for these companies, Goldman's going to generally get the most love by the street. Mm-hmm. Which, by the way,
have a little bit more. They're more trading, investment banking, less consumer facing. So
exactly.
That's the strength within all of these reports. It makes sense that they're going to be the strongest of the bunch.
They were up 50% coming into this annually, which is an amazing rally for a big bank. So I mean, Goldman to be able to come back 5% and push $600 this morning definitely suggests a pretty positive tone, I think, on the economy too.
Yeah, and kind of shifting gears, but staying in the same world. Citigroup, I think they're the easiest to see why the numbers are strong. Obviously, a lot of the same, beat on the trading revenue side, but they announced a $20 billion stock buyback as well, and so that never hurts the conversation. They're up also, 4.5%, 5% here in real time. And then Wells Fargo, which is probably the one that is closest to JPMorgan in the consumer banking side, and they really serve the Midwest quite a bit as well. We know that they're big in consumer banking. A nice move here as well. I believe one of the strongest moves that we've seen in the last few months. So they jump, 5% as well. They see net interest income around 1 to 3% higher than 2024. So nice backdrop in 2024, but all these banks see the picture as better in 2025. And if it was already a good backdrop, better has got to be, positive for these stocks.
Okay. The last one here, Blackrock, as the asset manager, up 4%. It had peeled off pretty hard the last couple of weeks. I wonder if that had anything to do with some of the crypto weakness, given the Bitcoin ETFs were a big contributor on an annual basis for this company. What stood out to you?
Yeah, looking at this one, this is just a situation where I think when you look at the revenue side, it beats, but then you look at the asset side under management, it actually is slightly lower than expected. So it's, to me, a margin story. They're seeing expanding margins versus where the street is, and that's a good picture. When you look at equity inflows for quarter four, just massive. They smash it, $126.57 billion. Versus the $73.5 billion that was expected. So you're just seeing them, it's kind of goes without saying that they dominate this space, but they're just putting their foot down and planting their flag and just how powerful they are within this asset management world.
Okay. BlackRock's a beast, no question about it. And flows of all forms generally have been the story from 2024. People are buying bond funds, buying stock funds, buying crypto funds. So BlackRock's going to love it when things go up. Appreciate it, Alex. Good stuff. Nice.